So
post-9 rules.
Powell was on message, just his message of last week.
No surprises.
So what do we do now? What do we do with what he had to say? I mean, he said could get 2 more hikes.
Look, I think every day is an opportunity to make sure that you don't react to whichever Fed head is giving a speech. And actually, Powell's going to speak tomorrow again, and I doubt it'll differ very much. So this looks like it was in the realm of expectations. Nobody is shocked at all by the news. But even if they were, you look back at the last 6 months since the year began, and pretty much every quote-unquote Fed speech shocker has been a great buying opportunity. I don't think the Fed has the ability to scare markets lower with what it wants to do with overnight rates, especially when you consider the way we're seeing, number one, economic data surprise to the upside. I can't believe it is, but it is. And then number two, the intermediate term and long-term rates are not really moving on what the Fed has to say. And I think that's indicative of a market that understands that the balance of 23 may not be super red hot, may not be ice cold, somewhere right down the middle. And in that environment, American corporations have already demonstrated that they have enough levers to pull to deliver earnings at least meeting expectations, if not exceeding. And that's the bigger story this year, not what happens with overnight Fed funds rate.
Feels like the bulls are starting to come out of the woodwork, okay?
Price has a habit of doing that.
Okay. You're not wrong.
Okay.
Savita Subramanian takes her most bullish position in at least 10 years. KKR's Henry McVeigh, the time to be negative was the end of 2021. Others talking about FOMO. There's more room to run. Do the bulls, in your mind, have control of this market now?
I think they do, because the things that you would be expecting to see if the bears were going to take control just haven't materialized yet, and they could. So I would never tell you that something can't happen in the economy. But what are the things that most people are focused on to try to understand if there's going to be equity market stability? Well, the number one thing is, how is the consumer doing? And we know that the consumer has somewhat downshifted, but the household balance sheet of the consumer is not an issue. And after 525 basis points worth of rate hikes, you would have thought that those chickens would have come home to roost. Then you actually look at what's going on and you recognize the biggest category of consumer debt by far is the mortgage. It's like 10x the next highest thing, which is student loans. Take those two things. There are no student loan issues right now, thanks to the federal government.
Payments are coming back soon.
Okay, fine, but right now, there's no issue whatsoever. That's about $1.3 trillion. Credit card debt's $1 trillion. Mortgage debt is 12. There's no issues in the mortgage market. I think it's something like 60% of all households have a mortgage under 5%, and they've all refinanced. And so where is the credit issue that was supposed to arise as the Fed took rates higher? Where are we seeing the quote-unquote cracks in the consumer? They don't exist. So I don't want to give people the impression that that can't get worse. We've had a lot of tightening. We're still shrinking the balance sheet. We're still shrinking money supply at a very fast rate. But at least, wait to see some evidence of that case materializing.